All right, Tuesday, 9/10, September 10th, FOMC 18th, ECB 9/12. Important, important. Now, what you're looking at on the screen is what I'm going to make the highlight today just to get you focused on Thursday and next Wednesday, a week from tomorrow, and then in 2 days. ECB, 7:30 a.m. Central, press conference, and then Wednesday, 1 p.m., the statement, and then 1:30 press conference, Central Time, Powell, FOMC, all important stuff. You got bond prices that are weak, and you also got stock prices that are weak today. So that means that overlap, the weakness in both prices, have to do with maybe the camp now up to 8.8% and lifting that they won't do anything at the next Fed meeting. This the 2-quarter would be where rates are now for our Fed. So 8.8% people say that they leave them the same after next Wednesday's meeting. 91.2% says no, they're going to do a quarter. So that's pretty much baked in. They should do a quarter. If they don't, that's a big surprise. But about a week ago, there was 10% chance they do 50 basis points. So that changed. 20% swing, 10% they do 50 to now 10% they do nothing. So I think the market got overdone to the upside, baked in some good news with U.S.-China trade that they're going to meet in early October now, or they set a date, and then they kind of came off and they're just drifting sideways, waiting to see if we're going to get all this QE everything. QE in Europe, 25 basis points and some dovish statement or dovish words in the statement, dovish press conference, unlike July 31st. Markets got pounded for the next couple of days after Powell's press conference at the last meeting. But either way, you could see 91.2%. Go to the CME, this website, this link, and have this up, bookmark it. You should be looking at this daily. This is what's driving the market. All right. And so when this becomes important, then stocks and bonds don't move opposite. They move the same. So you look at the bond prices, they're weak. Stock prices, they're weak. Why? Well, maybe the markets and investors are pricing in a less dovish Fed. You don't have to be an economist to know that. In fact, I don't want you to be. I'm not the smartest guy in the world, but I'm smart enough to know that. And that's what you need to be too. Be simplistic. Try to find out things most of the rest of the world don't think of, know of, see. That's why I'm doing a talk in Toronto a week from Saturday. And the title is Why the Trend is Not Your Friend. And the reason is, in a nutshell, because after you see it's a trend, it's probably too late to get on it. When it's an obvious trend, it's an obvious trend. It's over with. It's the whole crowded trade syndrome. To make money, you got to be kind of at the beginning of a trade and let the tailwinds of that trend take you up. Now, there's strong markets, right? That's different. But a trend, generally, it's over. It's over. Or you're at the tail end. You're still wearing bell bottoms in 1982. Hey, that was trendy in the 70s, pal. Or a mullet. Still got a mullet in 1995? All right. So don't be late to the trend most people are. Most times when people recognize a trend, it's late. And that's why that's the title of it. The whole notion of what's driving us, and that's the whole key of this little short clip. Probably Fed policy. Obviously, it's U.S.-China trade and some deal, no deal type of talk. But ECB Thursday, 7:30 a.m. Central. They do their what they're going to do on rates. They're going to cut at 6:45 a.m. and then 45 minutes later, I think Draghi's last press conference as ECB chief will be given, and markets will move. The euro, the Bund, the DAX, but also U.S. markets, even though they're not open. Bond markets will be open, but U.S. bond markets, but they'll bleed over and affect U.S. trade or U.S. equities and U.S. treasuries. But obviously, Bund, Bobble, Shots, DAX, Euro stocks, the euro are going to be more sensitive to any kind of hiccup or outlier in the press conference from the ECB Thursday morning. Then a week from tomorrow, 1 p.m. Central, is you get the FOMC. So again, go to the CME, search it, use this, have this bookmarked, see how it might change from day to day, refresh the damn thing. And then you could even go tab across October 30th, which is the next meeting after next Wednesday. And you could see, look at this and read it. Right now we're at 2 quarter, right? So 40% chance that they're 175 two even, but they should already be there by October 18th. So it's a 56% chance that they go another quarter. So it's a probability they do a quarter over the next two meetings. So that's to get a little confusing when you go out. Last meeting of the year is December 11th. You could see only a 2% chance that they're still at where they're at now, right? Mostly they're thinking quarter by the year end. So 50% chance it's a quarter cut, which would bring us to 150, 175 from the two quarter that we're at now. Still a little bit of a chance, though, that they go 75 basis points from where they're at now. An interesting, easy to read tool website. If you just followed what I talked about, what's the probability? That's the Fed Fund Futures. What's the probability of a rate cut? So you begin to see how things get baked in. And register to the Toronto. Maybe I'll put that in the YouTube below. Click on the link, register. Even if you're not going to come, register to this money show and you'll get information about me. And I'll send you guys a clip of the speech or the presentation a week from Saturday. So you guys are watching this on YouTube. Click below.